Hello, fellow traders everywhere. Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Monday, the 12th of December. I hope you can join us in Salt Lake City in January, the 24th to the 27th for the MarketClub Investors Summit. I think you'll learn a lot about what we do here and how we can help you in 2012. You can give us a call toll-free at 1-877-219-1482, extension 10234. Internationally, you can call us at 801-341-3981. So I hope you can be there. I'd love to meet you personally, and you'll get to know what we do at MarketClub and how it can help you in 2012. Now let's get off the commercial. Let's go to what's going on in the marketplace. So it's risk on, risk off. Well, what will tomorrow be? We'll be talking today about the gold market, the collapse in gold, and is the move to the upside over? And we'll also be telling you exactly what we think you should be doing right now in the gold market. We'll also be looking at the euro and have the shorts got it wrong in the euro-dollar cross. We'll also be looking at 3 stocks that have big moves today, and we're going to be analyzing those markets based on our trade triangle technology, and the question is, have they got the move right? Now let's go to the one truth we count on every day, and that is the charts and our trade triangle technology. We will see how they can create, protect, and expand your wealth in the future. So let's go to our portfolio, and here we are. We're going to be starting with the S&P 500, and this is the risk on, risk off trade we've been seeing all along. And as you can see right now, we've had, just looking at this on a daily basis, down day, up day, down day, but Friday's up day didn't take away the down movement we saw. We did close higher for the week, however, but it looks to me like this market's on the defensive and likely to remain on the defensive for the balance of the week. Now you can see our trading score is minus 55. This is always in trading range, and this is what we've talked about before. This market has been in a trading range actually for quite some time, lacking any strong trend either up or down. So if we take our Fibonacci tool, which we use quite often here on the show, and we click on the very highs right here, and we drag that down to the lows, we could be seeing this market get down to the 1200 level, 1200 level, quite easily in the next several days. But it looks to me the market's on the defensive. You are coming from an oversold, overbought condition, I beg your pardon, and you're seeing some more just beginning to roll over and lose momentum on the upside on the MACD. So generally speaking, you've got a monthly that's negative trend for the monthly trade triangle, indicating longer-term negative information for this market. Short-term is positive. The intermediate term, I should say, is positive, and the very short-term is negative. So we've got this conflict, this conundrum, or enigma, whatever you want to call it, in the markets right now. Risk on, risk off, and I think for the most part we're going to be a little bit on the defensive this coming week. So let's see how that plays out. The next market we're going to go and take a look at is going to be the silver market, and there again we have a situation where we have all of our trade triangles in a negative mode. And as you may remember, we've been looking at this market on a negative light anyway, because we've been very, very bearish in the sense that we've had our trade triangles, the weekly and the monthly, negative on the silver market for quite some time. And the question is, are we going to see a play like we saw here in September when the market moved down quite dramatically in a short period of time? We've had this long period of what many people thought was consolidation, but it's rolling over to the downside. We've talked about that on previous shows. With a score of minus 100, I would think that we're going to see this market potentially move a little lower. We are in an oversold condition, so we may see some bounce, but generally speaking, that's what we're seeing in this market now. The big story today, of course, was gold, which dropped almost 3%, over 3% at one time. And you can see it just touched the bottom edge of the Donchian trade channel. We still have our monthly trade triangle, the long-term trade and trend for gold, according to our trade triangles. This one is positive still, even after this drop. The question is, how far can this drop go? And that's what we'll be analyzing today. So let's take the Donchian trade channel. We are at the lower end of that band. Let's just take that off for the moment, and we can see what's really going on in this market. So we're going to put our Fibonacci retracement level. We're going to go from the very, very high we saw here recently, which is 1800. And we're going to click there and drag this down to the lows we saw back in September, late September. And you can see we're getting close. We've already hit the 50% retracement. And again, we've taken out this level. And the next level of support, in my mind, is the 1636 level. Is that going to be enough to support this market? That remains to be seen. But generally speaking, this market is going to be on the defensive. You can see the move here just the last 3 days. I think a lot of people who are in the gold market are very disappointed. And one of the things we talked about several months ago, when you see all these people advertising buy gold, buy gold, buy gold, it's usually time for a top, and that's exactly what happened. Obviously, the top is in place. We've seen that. I think next year we're going to have another shot at moving up, possibly to 2,000, if we don't see any improvement in the current state of affairs, both internationally in Europe and also here in the States. So generally speaking, the market's on the defensive right now. It's pushing out along a lot of people who have been long this market, the week longs, but longer term, you should stay. If you're a long-term bull on gold, you should stay in the market because the signal has not been put in place yet to be out of this market. So let's see how that plays out. But generally speaking, next stop is 1636.94. That's a 61.8% retracement. Can we get there? Well, and the reality is we're not that far away. We're like $30 away, $28 away. And if you look at today's move, we could be there tomorrow. So would that be worthwhile taking a shot to buy it? I think so. I think you could do that, and you could basically, you could put your stop, I would say put the stop under this low right here on a close-only basis, and that closed at 1624. So you'd be looking at maybe a $12 risk potentially. But that's a trade. That's based if you're a longer-term trader. So that's why I would say that would be something to look at. But let's go to our next market. And the next market we're looking at is the copper market, and we've talked about copper for quite a while now. We've said it's a minus 55. It's a trading range. We also said it reflects the stock market, the economic activity, and of course today we saw that on the downside being pushed down because of the stock market. What was interesting on Friday when the stock market was actually up, we actually closed lower on copper. Could have been an indication of things to come. But generally speaking, with a mixed minus 55, it's a trading range, much like the stock market. And the longer term monthly remains negative from 389. We're currently at 346. So you can see it's a much higher level. And we have to scope that out to see where the monthly is, which is right back here. And I think that's something to be pretty cool. That's why I say sometimes these monthly trade triangles don't kick in right away, but they certainly give you a good clue as to what's going on in the marketplace. So let's go to our next market. And the next market we're looking at is the oil, crude oil. Crude oil's on the defensive. However, with our monthly trade triangles and intermediate term trade triangles in a positive mode, we still like this market from the long side. It's still sharpening up, coiling up, if you want to call it that. It's going to have some support right around, I think, the 95 level we're looking at on the downside as offering good support for the crude oil market. And I think that's, generally speaking, where we could see a potential pullback. So not so far from here, maybe $1 from here, $2, so forth. But I think it's going to generally find good support at 95. So plus 65 indicates that we're in a sort of a quasi trading range. We're not quite out of a trading range. It's at the top end of a trading range. So if it pops into 70 tomorrow, perhaps, then it's still an emerging trend to the upside. Generally speaking, we're bullish on this market based on our two long-term intermediate and long-term trade triangles. So next market looking at, that's the dollar index. As you know, we've been very positive on this index. You can see all of our trade triangles are plus 100. And you can see where we basically got in this index way back here at 76.61. So this is back in July. And you can see how we've held this market. Even in the pullback, this is the difference between if you're a long-term trader and intermediate-term trader. If you're an intermediate-term trader, you would have gotten in right here at 77.67. The market's obviously about $2 higher than we are right now. But generally speaking, it allows you to swing trade if you're an intermediate-term trader. Obviously, the trend is positive with the monthly. You would have bought it right here at 74.76. You would be out at 76.79. A couple of dollars profit. you'd have gotten back in. You never trade against the major trend being the monthly. You would get back in right here at 77 to 67. And of course, you've got a couple of dollars profit in it right now. So generally speaking, the trend is very clearly on the upside. If we clear these levels and close over 80, it will be a very strong boost for the US dollar and probably put more pressure on the US stock market because of exports. So let's go to our next market. The next market we're going to be looking at is actually the Reuters Jefferies CRB Commodity Index. And as you know, we've been negative on this index, and that's worked out well for us based on our trade triangle technology. As you can see, all of our trade triangles are negative. We were looking for this market to move down to the, when it got up to 315, down to 305. We certainly got there. Potentially, can this market go lower? Yes, I believe it can. It could potentially test the 295 level. It's saying it's a deflationary economy right now, and that's the important thing to remember. Now, the other thing that we could potentially be doing, I'm going to put our Donchian trade channels. You can see we moved out of the Donchian trade channel, so there's a possibility we could move back in this market. We are in an oversold condition. We've made a new low here, but we did not make a new low in the Williams percent R, potentially setting up for a bullish divergence. So if we turn this back up, this would be a new low here on prices, but not in momentum. That's a big, big thing to watch. We'll be watching that all this week. And based on, let me just take the volume off so we don't have that on the screen, and it's easy to do. All you have to do is just go to on-chart studies, below chart studies, and take the volume off, boom, and it's gone. We can take a look at the other indicator, and that's the MACD. Now, MACD is a trending tool. It just turned down a couple of days ago, 3 days ago, and it's still in a negative mode. So all of our trade triangles negative, minus 90. It looks like it wants to go lower. Now let's take a look at the three markets we talked about earlier that are having big moves today, and they are going to be Vulcan Materials, Netflix, and Edwards Life Sciences. So let's look at Vulcan Materials. It's going to merge today with another company, and you can see we got a signal here at 36.70, but we had a signal before that at 32.75, indicating that something was going on. This is the really great thing about trade triangles is they don't know necessarily the news. They don't have any insider tips, but what they do track are the markets themselves, and that's what tells you what the insiders are doing. So certainly today's action, 36.70, the move is pretty much over with for the day. They're going to be absorbed. So, but again, it shows you just how powerful these trade triangles are and how they anticipate and show you, in this case, days before something was going to go on with this market. So let's go to our next market. The next market we're going to be looking at is Netflix. Now, Netflix has obviously had a lot of negative news coming out about it. And if you look at this just purely from, you don't know anything about the news, you don't know anything about Reed Hastings, the guy who's the CFO of, actually, he's the president of Netflix, and you don't know anything about their product, you have to say this market is dismal. You can see basically where the monthly kicked in right here on August 9th of this year at 225.30. There's the number right there. And you can see the weekly kicked in earlier than that at 270.55, and we're trading at $79. Now, today's action, even though the market is up almost 5%, still does not change the trend in this market. We may see a short covering rally, maybe up to $90 or maybe even $80, $90, but the reality is it's in an overbought condition. Your MACD is in a positive mode, but you've got two of our three triangles. What they're saying right now with the green triangle at 69.32, it's 74. It's saying the short term, very short term, is in a positive mode. And again, this gets back to, if I put this in, you can see we picked this up on December 5th, that something was going on in this market. And of course, today's action confirmed that. These are indicators that anticipate what's going to happen in the markets. That's the important thing. So let's go back to our portfolio, look at our last market. It's Edwards Life Sciences. It's a plus 70 on our score. It's up about 4% for the day. Has this really changed? Well, two things you could look at on this market is plus 70, so it's an emerging trend. It's not a fully developed trend yet. You've also got a double bottom pivot point. And if you just measure this, I'll put something on. Let me just simplify this so we can get this really clear for everybody. And that is, we're going to make this into a line chart where we're going to take the Donchian trade channels off, and you can see how it's just made that turn. Now you could measure up from the lows, so you could be looking at maybe the 70, 71, 72 level on the upside. And if we take this on a Fibonacci retracement, let me get that right, Fibonacci retracement right here. You're also looking at the 71.59 is a 61.8% retracement. So 71 to 72 would be a target zone for this. It's currently trading at 67. Again, it's up for the day. The market's generally down for the day. Longer term, though, however, then it's a negative trend. So you would be trading against the trend, but just remember that at 67.41, the market's currently trading at 67.14. That was an indication that the short term or the intermediate term trend was up. You've got a pivot point. You've got a double bottom, more or less, and it shows up better probably with the charts here. If we close over the high close in this particular case at 66.81, and it looks like we will do that, then it's a case of this market going higher up to that level. So you've got maybe a $3 or $4 profit opportunity. Not a lot, but certainly in these markets, I think you take whatever you can get. Hey, we've covered a lot of ground today. I really appreciate you stopping by and visiting with us. And I want to say, if you have a chance, come and visit us in Salt Lake City. I think we'd love to see you there, and join our Investors Summit, Market Club's Investors Summit. This is Adam Hewison for Market Club. I'll see you right here on the Market Club TV channel at 1 p.m. tomorrow. Have a great trading day.